Welcome back to the Deep Dive. Today, we are looking at a check, a really, really big check.
Hey, that's one way to put it.
No, I want you to actually picture a piece of paper, or, okay, more likely, a digital wire transfer authorization with a 1 followed by 9 zeros.
$1 billion.
$1 billion. And I don't mean a metaphorical check. I mean a literal 10-figure injection of cash that has, I think, fundamentally changed the relationship between the United States government and private industry.
It's a fascinating moment in time. It really is. It's so rare that you see the machinery of government finance laid bare quite like this.
Right.
It's usually hidden behind, layers of bureaucracy. It's obscured by subcontracting and black budgets. But this is right out in the open. It is a signal flare to the entire market.
And the timing is everything. It is Thursday, January 29, 2026. If you've been watching the financial news wires this morning, you saw the earnings release from L3Harris Technologies.
Yep, ticker LHX.
And usually earnings calls are, let's be honest, pretty dry affairs. You get some revenue numbers, some margin guidance, maybe a vague promise about synergy or cost-cutting that makes everyone sort of roll their eyes.
Oh, absolutely. Standard corporate speak.
But today was different.
Very different. What we're seeing today is really the culmination of a strategy that has been building for the last 12, maybe 18 months. L3Harris has effectively declared itself the industrial anchor of what the Secretary of War is calling the arsenal of freedom.
That phrase, the arsenal of freedom, it sounds like something straight out of a history book, doesn't it?
It does.
Like we're back in the 1940s ramping up for World War II with Rosie the Riveter and the whole 9 yards.
And that is exactly the vibe the Department of War is going for. They are invoking that historical weight on purpose.
Yeah.
But here is the hook, the thing that makes this deep dive so urgent today. The U.S. government doesn't usually act like a venture capitalist. They buy things. They sign contracts for jets or tanks or, paper clips. But as of this month, January 2026, the Department of War, and you should note the specific naming convention there, they are using the historical Department of War title in these documents, not defense.
That's interesting in itself.
It is. That department has written a $1 billion check directly into a specific business unit of a public company.
It's startling. I mean, we talk about public-private partnerships all the time, but this is the government buying equity, or, well, as the documents call it, a convertible preferred security. I want to put a pin in that term because the financial engineering here is almost as interesting as the rocket engineering.
Oh, almost. And the why matters right now because we're at, frankly, a Sputnik moment.
A Sputnik moment.
The United States is facing a crisis not of capability. We know how to design great weapons, maybe the best in the world, but of capacity and speed. We literally ran out of rockets. We ran out of motors. And the old model of defense contracting, the slow, cost-plus, take-your-time approach, it just died. It's over.
So today we're going to unpack the 3 new engines of this L3Harris machine. They've just gone through this massive reorganization that just took effect this month.
That's right.
We're going to look at the Golden Dome, the administration's $25 billion missile shield. We're going to dissect this Missile Solutions IPO, which is a financial maneuver that, like you said, is pretty fascinating. And we're going to figure out if this turnaround alpha verdict that the analysts are throwing around actually holds water.
Yeah, the mission for this deep dive is, I think, pretty simple. We need to understand how a company that used to be known as a merchant supplier, a company that just made parts for other people's big platforms, has transformed itself into a national security necessity.
Okay, so let's start there with the context. Because if you looked at L3Harris 2 years ago, or even in early 2025, they had a very different slogan. They were calling themselves the Trusted Disruptor.
Right, Trusted Disruptor. And it was a good slogan at the time. It really was.
What did it mean?
It signaled that they were faster than the big legacy primes, the Lockheeds or the Raytheons, but still reliable enough to handle classified work. The trusted part was key. It was all about being agile, about shaking up the status quo. They wanted to be the speedboat weaving through the aircraft carriers.
But looking at the documents they released this morning, the Q4 2025 results, and their whole 2026 strategic outlook, the language has completely shifted. They aren't just disrupting anymore, they are anchoring.
The shift is subtle, but it's profound. The strategy has moved to speed and capacity. If you read the transcript from the earnings call this morning, the CEO, Chris Kubasik, is very, very clear on this point. The Department of War, the Dow, they don't care as much about capability in the abstract sense. They care about production lines that are open today. They care about whether you can actually build the thing in volume. They don't want another PowerPoint prototype. They want a warehouse full of product ready to ship.
And to align with that new reality, they basically blew up their old corporate structure.
They did. Up until very recently, L3Harris was organized into 4 segments. It was communication systems, integrated mission systems, space and airborne, and then Aerojet Rocketdyne after the acquisition.
It felt a bit jumbled.
It was a bit of a mix and match structure, yeah. And that's largely due to how they acquired companies over the years. It was messy. It was really hard for investors to understand where the value was truly coming from.
And as of this month, January 2026, that is all gone.
Correct. As of this month, we have a new 3-segment structure. And this is crucial for you to understand. If you follow the money, you understand the structure. They have designed this organization to catch the specific streams of cash that are flowing from the Pentagon right now.
It's like they built 3 specific buckets to catch 3 specific waterfalls of government funding.
That is a perfect analogy.
Okay, so let's break down the 3 buckets. I want to make sure we have a clear mental map of this company before we get into the rockets and the billion-dollar check.
All right, bucket number 1, Missile Solutions, or MSL. This is the pure-play propulsion beast. It combines the massive Aerojet Rocketdyne acquisition with their own internal high-tech stuff like seekers and weapon release systems.
So that's the rocket engine.
Yes.
Literally, the fire and the fury part of the business.
Literally, yes. Bucket number 2, Space and Mission Systems, or SMS. This is the architect of the Golden Dome we mentioned.
Okay.
This is the segment that captures the space tracking layer, the satellites, the high-end intelligence assets, the eyes in the sky.
And the third one.
Bucket number 3, Communications and Spectrum Dominance, or CSD. This is the cash cow. This is the high-margin, almost commercial-like engine that sells radios and advanced electronic warfare tech.
It really feels like they're decoupling the heavy, dirty industry from the high-tech software side of the house.
That is exactly what they are doing, and it's brilliant from a financial perspective. You have Missile Solutions, which requires these massive factories, giant ovens, industrial mixers. It's heavy capital expenditure. It's a loud industrial business.
Right.
And then you have Communications, which is all about software-defined radios and advanced algorithms. It operates like a tech company with 25% margins. By separating them like this, they allow investors, and importantly the government, to value them differently. It unlocks the hidden value.
Okay, I want to zoom in on that first bucket, Missile Solutions, MSL, because this is where the billion-dollar check comes in. And I have to ask why. Why does the government need to step in and invest directly? I thought we had a free market for this stuff. If the demand for rockets is high, wouldn't a company just, build a factory to meet the demand?
You would think so in a classic Economics 101 textbook. But the defense market isn't a free market. It's what's called a monopsony.
A monopsony.
A market with only one buyer. And for a very long time, that one buyer, the U.S. government, was buying just enough to keep the lights on, but not enough to justify expanding the factory.
So the factories were just running at minimum viable capacity.
Well,
just enough to keep the specialized workforce employed and the lines from going cold?
Exactly. They were keeping the pilot light on, but the main burners were off. And then the geopolitical environment exploded. Ukraine, the Red Sea, rising tensions in the Pacific. Suddenly, the demand went from keep the lights on to we need everything you can build, and we needed it yesterday.
And you can't just flip a switch.
You can't just flip a switch and build a rocket motor factory. It takes years. It takes billions in capital. And the market, the so-called free market, it completely failed to anticipate that surge.
Market failure. That is a loaded term.
It's the only term that fits. It's the reality of the supply chain. Let's really identify the problem here. The bottleneck in U.S. defense wasn't the missile itself. We can build the guidance chips. We can build the warheads. The U.S. industrial base ran out of solid rocket motors, SRMs.
I want to pause here and clarify something for everyone listening. When we say solid rocket motors, we aren't talking about Elon Musk landing liquid-fueled rockets on a barge.
Yeah.
This is different tech.
No, completely different physics. A liquid rocket, like a Falcon 9, uses pumps and valves and super cold cryogenics. You can throttle it. You can even turn it off and on again.
Right.
A solid rocket motor is essentially a controlled explosion. It's a casing filled with a rubbery, explosive fuel. Once you light it, it burns until it's done. There's no off switch.
It's simple, it's shelf-stable, and it's instant.
That's why we use it for weapons. You can leave a Javelin missile in a box for 10 years in a depot, and when a soldier pushes the button, it works. instantly.
So we're talking about the propulsion for pretty much all the key tactical weapons.
We are talking about the Javelin anti-tank missile,
Yeah.
the GMLRS rockets that are fired from the HIMARS trucks you see all over the news. We're talking about THAAD and PAC-3 interceptors that shoot down incoming ballistic missiles, and the Standard Missile for the Navy, which is the backbone of fleet air defense.
So basically everything that goes boom and moves really, really fast.
Exactly. And the choke point was severe. I mean, truly alarming. It wasn't just the chemical propellant itself. It was the specialty nozzles that can withstand the heat, the carbon fiber casings, the igniters. The supply chain was incredibly fragile.
How did it get that way?
Consolidation. After the Cold War, the industry shrank. For a long time, we really only had two major suppliers in the U.S. Aerojet and Northrop Grumman. And they just weren't incentivized to build massive new factories that might sit empty if the war stopped. It's a rational business decision, but a terrible national security outcome.
So we had a major shortage. And when you have a shortage of something that prevents you from defending the country or supplying your allies, the government gets nervous.
Nervous is putting it mildly. The Department of War looked at the consumption rates in Ukraine. They looked at their own modeling for a potential conflict in the Pacific, and they realized they would run out of critical munitions in days, not weeks or months. Days. That is the Sputnik moment. They looked at the spreadsheets, they looked at the stockpile, and they panicked. So they negotiated this unprecedented partnership with L3Harris.
Okay, let's unpack the deal itself. It's $1 billion. What does L3Harris have to give up for that? Because usually, if a VC firm puts in $1 billion, they want to own a huge chunk of your company and probably fire the CEO.
And that's the beauty of it for L3Harris. They give up very little control. The Dow is putting in that $1 billion via a convertible preferred security.
Okay, define that for me. What is a convertible preferred security in layman's terms?
Think of it as a hybrid between a loan and a stock. The government gives L3Harris the money now. Initially, it acts like a debt instrument. It might pay a small dividend. But at a certain date in the future or under certain conditions like an IPO, that debt converts into equity, into actual shares of the company.
So the government becomes a shareholder.
Yes, but a passive one. The expectation, according to the documents, is that they will own a single-digit percentage of the new missile solutions company after it goes public.
A single-digit stake for $1 billion.
Yes, but, and this is the absolute key, they get no board seats. They get no management control. They don't get to tell Chris Kubasik how to run the business.
That seems incredibly generous. Why would the government agree to a deal like that?
Because the Dow doesn't want to run a company. Let's be blunt, they are terrible at running companies.
Right.
They want rockets. They want a financial return on their investment, sure, but mostly they want the factories built. And they want them built now. They are essentially underwriting the risk of construction. They're saying to L3Harris, here is the money to build the factory so that you don't have to borrow it from a bank at 8% interest, and you don't have to dip into your own cash flow that you need for R&D and shareholder returns.
And this all leads directly to the IPO spinoff we mentioned in the intro. L3Harris is taking this whole missile solutions business and taking it public.
Yes. The plan, which they confirmed in the January 2026 Outlook, is to IPO Missile Solutions in the second half of this year. L3Harris will retain a majority stake, so they still control its destiny, but it will become a standalone public company with its own stock ticker.
Why go through all that hassle of an IPO?
Right.
Why not just keep it in-house and create a new reporting segment?
There are two big reasons. The first is valuation. The market does not value a heavy manufacturing company the same way it values a high-tech software company.
The conglomerate discount.
Exactly. If you lump them together, the boring factory business drags down the stock price of the cool tech business. By spinning it off, you force the market to price the rocket business separately from the radio business. It's a classic move to unlock shareholder value.
Okay, that makes sense. Arbitrage. What's the second reason?
Cash flow. This is the big one. Building rocket factories is incredibly expensive. It burns a ton of cash up front. L3Harris wants to protect its own free cash flow, which, by the way, they project will hit a massive $3 billion this year.
So they wall it off.
They ring-fence it. By spinning off missile solutions, the huge capital expenditures, the cost of all those buildings and machines sit on the new company's books, not the parent company's books. It keeps the parent company, LHX, looking lean and mean and cash-rich, while the new rocket company does the heavy, capital-intensive lifting.
That is pretty smart. So speaking of the construction, the sources describe this as a construction boom. Give me the scale here. How big are we talking?
It is genuinely WWII-style mobilization. We are not talking about adding a third shift at an existing factory. We are talking about breaking ground on 64 new buildings.
64. That's not a factory expansion. That's a small city.
64. 1 million square feet of new factory space. They are expanding their existing site in Camden, Arkansas. They're expanding in Huntsville, Alabama, which is, Rocket City. And they are building a completely new advanced propulsion facility in Orange, Virginia.
And what are they actually putting inside these buildings? I'm picturing it's not just a simple assembly line like you'd see at a car factory.
No, it's much more volatile. The sources specifically mention ovens and mixers. Making solid rocket fuel is a lot like baking, but with, high explosives.
The world's most dangerous kitchen.
Pretty much. You need these massive industrial mixers. I want you to picture a KitchenAid mixer the size of a 2-story house to blend the oxidizers and the aluminum fuel into this thick, rubbery slurry. Then you have to pour it into the rocket casing. That's the casting process.
And then you bake it.
You cure it. You need these huge, perfectly temperature-controlled ovens to cure the propellant so it hardens correctly without any cracks or air bubbles. If it cracks, the surface area for burning changes, and the rocket could explode on the launch rail when you light it.
So precision is everything.
It's everything. And they're trying to automate it all. The new lines have automated casting and digital workflows to remove human error as much as possible. They are moving from what was almost an artisanal process, where you had guys literally mixing the stuff by hand in some cases, to a fully automated, repeatable industrial process.
The sources mentioned a 60% increase in deliveries over just the last 2 years. So that's already happened.
Yes, that was the initial surge using their existing footprint. But the goal now, with this new billion-dollar investment, is to triple their entire rocket motor production capacity by 2030.
Triple. That is a massive scale up. That implies they believe this level of demand isn't a temporary blip. It's the new normal.
They're betting on a decade of sustained high tension. And remember, it's not just for their own missiles. The sources mention a deep connection with Kratos Defense. L3Harris is now producing the Zeus hypersonic motors for Kratos' target drones. They're ramping up to 60 of those huge motors annually just at the Arkansas facility.
So they're becoming the gas station for the entire missile industry.
That is a fantastic analogy. Whether it's a Lockheed missile or a Raytheon missile or a Kratos target drone, there is a very, very good chance the fire coming out of the back is made by L3Harris. They're the merchant supplier of propulsion. They don't care who sells the final missile as long as they get to sell the engine.
Okay, so that's the fire. That's the heavy industry, the foundation. Let's shift gears and talk about the eyes. Section 3 of our roadmap, space and the Golden Dome.
Right. This is where the story shifts from that heavy, dirty industry to high-tech surveillance from orbit. The Golden Dome is the administration's official branding for a comprehensive, layered missile defense shield for North America.
And this isn't just a concept anymore, is it? It feels like we've been talking about missile shields since Ronald Reagan and Star Wars.
True, but this time it's a line item in the budget. The FY 2026 budget has designated $25 billion specifically for the Golden Dome initiative.
$25 billion.
It's part of a larger $155 billion reconciliation bill. So this is no longer a PowerPoint presentation. It is a funded mandate from Congress and the White House.
That is a staggering amount of money for a single initiative. What, the sudden urgency, what changed?
The threat environment. The Sputnik moment we talked about earlier isn't just about running out of our own missiles. It's about the new types of missiles our adversaries have, specifically hypersonics.
Right.
Russia and China have both fielded weapons that move at Mach 5 or Mach 10, and this is the absolutely critical part, they can maneuver in flight.
Right, because old ballistic missiles, ICBMs, they just flew in a high predictable arc. You could calculate where they were going to land pretty easily.
Exactly, basic physics. A ballistic missile is like a fly ball in baseball. Once it leaves the bat, you have a pretty good idea of where it's going to land. But a hypersonic glide vehicle, it skips off the atmosphere like a stone on a pond. It turns. It bobs and weaves.
And our old radar systems can't track that.
They can't.
Yeah.
They were designed to look up into space for those predictable ballistic arcs. These new weapons fly lower in the upper atmosphere, and they move too fast and erratically for ground-based radar to get a solid lock. You get fleeting glimpses, but you can't build a reliable track file.
And if you can't see it, you can't shoot it.
Exactly. So the Golden Dome isn't really about the interceptors, not primarily. It's about building a persistent tracking layer in space. thousands of satellites in low Earth orbit looking down, using infrared sensors to spot the intense heat signature of a hypersonic missile the moment it launches and tracking it from birth to death.
And L3Harris has somehow positioned itself as the prime contractor here. But I thought, like we said earlier, they just made parts for satellites, the cameras and sensors.
That used to be true. Historically, L3Harris was a payload provider. So if you, a prime contractor like Boeing or Lockheed, were building a satellite, you'd buy the camera from L3Harris, but they would build the bus, the actual metal body of the satellite with the power and propulsion, and do all the final integration.
But now L3Harris builds the whole thing end to end.
Now they are a space prime. They build the bus, they integrate their own payload, they handle the entire mission. They made a very strategic $100 million investment to expand their facility in Palm Bay, Florida, specifically to build entire satellites and build them fast.
There's that word again. Speed. It always comes back to speed with their new strategy.
It's everything. CEO Kubasik made a very bold promise on the call this morning. He said they would have 40 hypersonic ballistic tracking space sensors, HBTSS satellites in orbit during the current presidential term.
40 in one term.
That is lightning fast in space years. Usually it takes 5 years just to design one of these things, let alone build and launch 40 of them.
And the government seems to believe them, based on the contracts.
The contract wins speak for themselves. The Space Development Agency, or SDA, is the agency building this new tracking mesh. They release their contracts in phases or tranches. You have tranche 0, tranche 1, tranche 2, tranche 3. It's an iterative development model like software releases. You launch tranche 0, you learn from it, and then you build a better tranche 1.
And how did L3Harris do in those competitions?
They executed a clean sweep. L3Harris is the only company to win prime contracts on all 4 tranches of the tracking layer.
All 4. Wow.
All 4. They just won an $843 million award for Tranche 3 to build 18 more of these advanced infrared satellites.
Being the only company on all 4 tranches, that implies they are learning and iterating faster than any of their competitors.
It creates a snowball effect, a virtuous cycle. They have the production line up and running. They have the supply chain figured out. They have the engineers who have done it before. So when the SDA says, we need 18 more and we need them to do X, Y, and Z, L3Harris can just say, okay, slotting them into the production schedule, whereas a competitor might have to say, well, let us build a new factory first. It has become a massive competitive moat.
So they are the eyes of the Golden Dome.
They are the eyes. And because, through their missile solutions business, they are also the engines that power the interceptors, they are capturing value at both ends of the kill chain. They spot the threat from space, and they power the interceptor that kills the threat.
That is an incredibly powerful position to be in. But let's not forget the third leg of this stool. We've done the fire, with missile solutions and the eyes, with space. Now let's talk about the voice, communications and spectrum dominance. CSD.
Right, and this is the part of the business that feels the most like a commercial tech company. It has a totally different rhythm.
I saw that phrase in the reports, comms or bombs. Explain that. What does that mean?
It's a catchy way of saying that modern warfare is completely networked. If you can't talk to your troops, if you can't transmit targeting data from a sensor to a shooter, your smart bombs are just dumb bombs. You're just a bunch of isolated people with guns who can't coordinate their actions.
And this segment operates differently than the rocket business, you said.
Very differently. The rocket business is heavy manufacturing. It's low turnover, high capital, long lead times. CSD is a high-margin tech business. They operate with margins around 25%, and their internal motto is delivering in weeks, not years.
Why is that speed so critical in communications? Why can't we just use the standard military radios we've had for decades?
2 words. Lessons from Ukraine. We have learned definitively that the electromagnetic spectrum is a battlefield, just as real as any trench. The Russians are incredibly good at electronic warfare, specifically jamming. If you go into a modern conflict zone with an old radio or even just a standard cell phone, they will jam your signal, intercept your location from your transmission, and drop artillery on your head within minutes.
That is absolutely terrifying.
It is.
Yeah.
The soldiers call it transmit and die if you aren't careful. So you need what the industry calls resilient waveforms.
Resilient waveforms. What does that actually mean? Is it just a stronger signal?
It's a smarter signal. It means the radio signal itself is designed to survive. L3Harris radios use these advanced waveforms that hop frequencies thousands of times per second in a pseudo-random pattern that only the receiver knows. They mask their signature so they look like background noise. They are incredibly difficult to jam, intercept, or even detect.
And that's why they are seeing such a surge in international sales.
Yes, that's the bow wave they talked about in the earnings call. Germany, Poland, Czechia, the Netherlands, they are all buying these radios by the thousand. And there's a powerful network effect at play.
How so?
If Poland buys L3Harris radios and Germany buys them, then the Czech Republic kind of has to buy them too.
Because they all need to be able to talk to each other securely.
Exactly. That's interoperability. It's the core of the NATO doctrine. If you show up to a major NATO drill with a different radio that can't speak the encrypted language of your allies, you are a liability. You break the network for everyone.
It's like the iPhone blue bubble versus green bubble, but with life or death consequences.
That is a surprisingly accurate analogy. You do not want to be the green bubble on the NATO front line. You will get left out of the group chat. And in this case, the group chat is the one calling in air support or warning you about an incoming attack.
This segment also includes electronic warfare and drones, right? It's not just radios.
It does. They have a system called Viper Shield, which is a new electronic warfare suite for the F-16 fighter jet. Poland just selected that for their fleet. It basically creates a defensive electronic bubble around the jet that blinds and confuses enemy radar and incoming missiles.
Okay. And what about drones?
The really interesting product there is called Vampire.
Vampire. It's a great name. What is it?
It stands for Vehicle Agnostic Modular Palletized ISR Rocket Equipment, which is a bit of a mouthful.
A classic military acronym.
Right. But the concept is brilliant. It's essentially a kit on a standard shipping pallet that you can bolt onto the back of any generic pickup truck in a few hours. It turns a regular Toyota Hilux or a Ford F-150 into a sophisticated drone-killing rocket launcher.
So you don't need a multi-million-dollar specialized anti-aircraft tank. You just need a pickup truck and this kit.
Exactly. And this directly solves the cost asymmetry problem of modern warfare. We've seen in Ukraine and the Red Sea that using a $2 million Patriot missile to shoot down a $20,000 drone is a losing economic strategy. You will literally go bankrupt winning the war.
So Vampire is the cheap, effective answer.
It uses low-cost laser-guided rockets. It's affordable, reliable drone defense. And because it's just a pallet, they can crank them out in huge volumes. It's high-tech capability with a low-tech, easy-to-use footprint.
So we have the rockets, we have the satellites, and we have the unjammable radios and drone killers. It really sounds like a complete integrated package. Yeah. But let's look at the numbers. It is January 29, 2026. The Q4 and full year results are fresh. What is the financial verdict on all this?
The numbers are strong, very strong. For the full year 2025, they hit $21.9 billion in revenue. That's solid organic growth of about 5%. But the number that really jumps off the page, the one that tells the real story, is the backlog.
The backlog, you mean future orders?
$38 billion. That is $38 billion worth of orders that are signed, sealed, and just waiting to be built and delivered. That is a massive cushion. It gives them incredible visibility into their future revenue streams. It means that even if all new sales stopped dead today, they have nearly 2 full years of work already guaranteed.
That's incredible stability. And what about their guidance for this year, for 2026?
They are projecting revenue to be between $23 and $23.5 billion. That's accelerating to about 7% organic growth. And this is the number the street really cares about. They expect to generate $3 billion in free cash flow.
$3 billion in pure cash. That explains how they can afford to fund all these expansions, even with the IPO spinoff helping out.
Well, remember, the IPO is designed to protect that $3 billion number. If they kept the missile business fully on their own balance sheet, the heavy construction costs, the CapEx would eat into that cash flow number significantly. By spinning it off, they keep the parent company's balance sheet looking pristine.
And what about costs?
We should definitely mention their efficiency program, LHX Next.
Right, I saw that. They exceeded their targets on that.
By a lot. They completed the program early, and they ended up saving over $1 billion in costs. That shows investors that while they are expanding their footprint, they're also tightening the screws on their own internal operations. They're doing both at the same time.
Which brings us to the investment thesis. The phrase on the street is risk-defined, portfolio protected.
That's the thesis. But we have to talk about the risks, because there's always a bear case. I don't want this to sound like a cheerleader session for the company.
No, absolutely.
Okay.
Hit me with the bear case. What could go wrong here?
The biggest one is execution complexity. They are trying to run a massive, complex IPO for a new company while simultaneously building 64 new factories and ramping up production of what are essentially high explosives.
That is a lot of moving parts.
It's a logistical nightmare. It is. If a factory gets delayed, if there's a supply chain snag, if there's an accident, God forbid, or if the IPO pricing falls flat because of market conditions, that's a significant risk.
Wow.
Building things in the real world is hard, and they're doing it on an epic scale.
And what about the political risk? We are talking about huge sums of government money here.
That's the other big one. The Golden Dome is an executive order project. It's a top priority of the current administration. $25 billion is flowing now. But what happens if the administration changes after the next election? Does the next president want a Golden Dome? Or do they decide to cancel it to fund healthcare or tax cuts?
That's always the danger with long-term government work, isn't it? The pen that signs the check can also be the pen that crosses it out.
It is. However, the bull case, what the analysts are calling the turnaround alpha, argues that the threat environment makes these programs basically uncancelable. You can't really cancel rocket motor production when your own military is telling Congress you're running out of ammunition. And you can't really cancel this space-based missile tracking layer when your adversaries are openly parading new hypersonic missiles. The geopolitical reality, sadly, acts as a firm floor under the stock price.
And the direct Dow investment changes the calculus, doesn't it? If the government itself owns a piece of the company, are they less likely to cancel its biggest contract?
It certainly creates a stickiness. It's what I would call state-sponsored de-risking. The taxpayer, through the Department of War, is absorbing the capital expenditure risk of building these factories. If the whole venture fails, the taxpayer takes a big hit on that $1 billion investment. But L3Harris shareholders are insulated from that specific risk. It's a very, very sweet deal for the company.
It really sounds like they have successfully positioned themselves as what analysts call a structural buy.
That's the term they're using. A structural buy means you don't buy the stock because of a single quarterly earnings beat. You buy it because the structure of the market, the geopolitical landscape, makes them essential. They are solving the Pentagon's single biggest headache capacity without bankrupting themselves to do it.
So let's try to wrap all this up. We've covered the reorg, the rockets, the space shield, the radios, and the money. What is the big overarching takeaway here?
I think the takeaway is that L3Harris has successfully pivoted. They are no longer just a tech company or a merchant supplier. They have become the brick-and-mortar foundation of this new missile age. They are building the physical infrastructure that the entire arsenal of freedom relies on.
And for the listener, why does this matter? Beyond just the stock price of one company.
It matters because what we're witnessing is a fundamental shift in how the U.S. government does business. For the last 30 years, since the end of the Cold War, the government has acted like a customer. They bought products off the shelf. Now they are becoming an investor. They are investing directly in industrial capacity. The line between a public company and a national arsenal is getting very, very blurry.
It's a new era of what some people are calling industrial sovereignty. We are deciding as a nation that we need to own the means of production for national defense, at least partially.
It is. And it raises a final and, I think, pretty provocative thought for you to chew on.
I'm ready. Lay it on me.
The Department of War is investing $1 billion for a single-digit stake in this new missile business. That implies a massive valuation for the new company, sure, but it also implies something else, something more fundamental.
Okay.
They aren't doing it primarily for the profit. They are doing it because the free market failed. It failed to build enough rockets on its own.
The invisible hand didn't build the factories when they were needed.
Exactly. The invisible hand doesn't care about national security stockpiles. It cares about quarterly profits and just-in-time efficiency. But war isn't efficient. War requires massive, seemingly wasteful excess capacity. So if the government has to step in to underwrite the factory floor itself, what does that really say about the state of American manufacturing? Are we moving toward a future where the arsenal of freedom is actually state-owned infrastructure, just disguised as a stock ticker?
That is a heavy question. Are we capitalizing the defense industry? Or is the defense industry socializing its own capital risks onto the taxpayer?
That is the question of the decade.
And on that note, we're going to leave you to ponder the changing nature of the military-industrial complex. This has been the deep dive into L3Harris and the new arsenal of freedom. Thanks for listening.
Stay curious.